Hello everyone. Welcome to Getting Started with Technical Analysis. My name is Barb Armstrong. I'm a coach and senior manager with Schwab. And today it can be kind of a humbling day in the markets, especially since the markets have been so bullish and all of the major indices are down. And you might be tempted to look at your accounts and, fire up the pity party and call the caterers because if you're bullish, a lot of positions are down today. But so today's topic is one day does not a trend make. And so we're going to talk about that. We're going to talk about how to position ourselves to be able to take advantage of the opportunities that this pullback may be creating. And so that's what's on the menu for today. I've got Mr. James Boyd in the chat. We are not going to talk about the fact that he had 100 people over on the weekend and, had the barbecue fired up. I guess my invitation must have gotten lost in the mail. I've redone my makeup. It was kind of a teary event when I found that out. Nah, I'm just kidding. But anyway, we've got James in the chat. He's a friend and a fellow coach. He's a wannabe Canadian, but, he hasn't quite been accepted into the Northern tribe yet. So be gentle with him because he's emotionally a little fragile. But you can follow him on X. If you're not doing that, he posts a ton. And so you're missing great stuff. So follow us at James Boyd CS and at Barb Armstrong CS. And you can follow us on LinkedIn now also. So wander over to LinkedIn and give us a follow there. Just as a reminder, we're going to look at a lot of charts today. We're going to play some example trades and just know that everything that we talk about is for general information purposes only, none of it to be construed as a recommendation to trade any particular strategy or stock. If I mention options, know that those carry a high level of risk and aren't suitable for all investors. And that, this is Getting Started with Technical Analysis. So obviously this is the main topic today, but know that, being aware of the news, what's going on globally, earnings season, and fundamental analysis is all a part of making an informed investment decision. We use the Paper Money software application on the Thinkorswim desktop platform. And although this is our typical rotation, we're going to go a little off grid today. So because I thought this was an important topic to discuss. So this is my account for trading a smaller account that we trade on Mondays and Fridays. And we got out of one trade today. We had done a short put vertical on Coca-Cola, and that worked out pretty well. But if we look down here at our overall totals, we were profitable yesterday. Like we had a net unrealized gain. And now, based on today's action, we have net, unrealized losses all over the place. And this is an account that has 32,400 and some in it. We were at almost 34,000 when the day started. We're down $1,438. So that's a flesh wound and that hurts. And it's not that every single position is down. We're up a little bit on MetLife. We're up a bit on Verizon. And, we were up on Coke today, but the majority of positions are down. What else are we up on? Nets? No. RTX is doing well today, but, lot of red on the screen. And so what I wanted to just point out, if we come and we look at the SPX, it's down, but yet still we're up 12% year to date. And if this is a 1-year chart, and it is, if I come underneath patterns and click on this and show price as a percentage, in the last 12 months, even as of today's drop of, 0.6%, we're still up 20%, almost 19.47% in the last 12 months. And, before we, get our knickers in a twist and, start exiting positions, Chicken Little is probably just warming up. She's not even doing laps around the yard yet. You know, we've just come down to this previous low here. So, you know, it all is not lost. Yeah, the Duke of Foxborough is saying, you know, part of the price we pay for trading. Yeah, and here's our NASDAQ. So we had this diagonal resistance breakout, and we all know how much James loves diagonal resistance breakouts. And sometimes a breakout can turn out to be a fake out. Or this could just be a fake out that it's come down below the line and it could rally again tomorrow. You know, or, you know, it could, if we duplicate this line, you know, it could come back down and bounce again. And you may say, please, like, don't even joke about that. We don't want that to happen. Well, we may not want that to happen. And keep in mind, support and resistance are not finite numbers. They're just they're ranges. Okay. And then when we look at, sorry, the Dow, more of the same. And so, you know, could this be setting up a bull flag? And again, this index up 10%, almost 11% year to date, still up even with this pullback, 21% in the last 12 months. And, you know, when we look at this, it's kind of come down to this previous high that it broke out from and is coming back. And this candle is a candle of indecision. You know, we could call this a doji. You know, in fact, it is called a doji. And at a support level, that's an indication that, you know, we might expect to see a bounce tomorrow. Now, with this candle pattern, what we're looking for is a close above the high of the low day. So this is, now some people will trade it based on expectation and say, you know, my expectation is that the overall market has been bullish. I haven't changed the way I feel about that. And so while you, with your, you know, whole rule book, you know, are saying that, you know, you could go ahead and place that trade today. Others are saying, no, my guidelines say I wait for a close above the high of the low day when I see either a doji or an inverted hammer or a hammer at a support level. Okay. Okay. So we've looked at 3 charts and we've looked at, just because it's a down day today, you know, and it's down how much? It's down like 0.2%. You know, but it's like, oh, but it's the 3rd day down in a row. Yeah. Like when you have an uptrend, sometimes we have pullbacks within the context of an uptrend. And, you know, just to kind of hammer that point home, like if we look at, say, Nike. So Nike's having an up day today. In fact, it's up 3%. But, you know, this is a stock that's down 36% year to date, down 47% in the last year. So one up day does not signal a trend reversal, or one up day does not an uptrend make. And even though, like, you know, this is a bullish Harami pattern at a potential support level, and you may say, well, this just broke this support level, you know, and it's kind of flirting with it now. You know, how many people want to place a bullish trade on Nike today? Yeah, not me either. So some might be saying, well, I see this as a potential bear flag, and I'd be looking for the sister strategy, you know, to the Kahold, which is the Kablode, or the close below the low of the high day. So if you wanted to trade something bearishly, you might say, I'm looking for this, you know, to start going back down. And I'd consider it an entry when it goes below the low of the high day. Okay. So just because it's a bullish day today doesn't mean, you know, it's a bullish stock. Or how about we look at Bank of America? So uptrending stock, right? Up 16% year to date, 33% in the last year. And we have this, pullback happening. And today, actually, we're up a little bit. But, this has been using the 10-day moving average as a support level. Like Bank of America has been on a tear. And it's an uptrending stock in what has been an uptrending market. And then if we come and look at the sectors and we look at financials, close to an all-time high here. And today's candle pattern, this is a bullish harami at a potential support level. And so that's pretty bullish. Now, it's not quite as bullish as James pointed out in this morning's class with the healthcare sector, which makes me think I've been spending too much on healthcare this year, because look at this. It's hitting a new all-time high today. But if you're looking for bullish stocks within bullish sectors, maybe healthcare and financials are two areas that we might want to have a look at. And so, with Bank of America, if we didn't have a position and we wanted to add this, and if we're saying, well, if our guideline is that we're looking for, a bounce off of support as a good time to enter, might this be a good day? And you might say, well, what about that, when you have a doji pattern that close above the high of the low day? Like, how could we do that if we wanted to place a trade today? And what we could do is say, okay, today's high on this is 64.40. And so I'm going to add 20 cents to that and say, if it goes to 64.60, I would like to add some Bank of America to my portfolio. And, here, if you're looking at this, you could say, well, the PE ratio is currently 14.8, which puts it in what many would consider to be a value category. It pays a dividend of 2%. Now, I have two things to say about dividends. One is that with a dividend stock, there's no guarantee it'll continue to pay a dividend, even if it's in your live account. And two, in your paper money, you do not get paper money dividends. So that's one of the differences between a paper money account and a live account. But for some people, a stock that pays a dividend might be, something that they're looking for as a way to add income. And so, let's come over here to our account for this class and say, okay, if we wanted to add, and we've got close to $1 million in this account, if we said, if we're okay with a position that's about 5%, we could do, 400 shares. That would be about $24,000. And we're going to enter when? Only if it goes above 64.60. And you might say, like, why would I want to pay more? Because I only want to get in if, in fact, it continues to go up. And so we are going to right click. We are going to buy custom with a stop. And where might we put our stop? Well, we might say, if we look at, let's back things up a little bit. It's really been using this 10-day moving average. And so if we even take today's low at 63.57 and we went 3% below that, 61.66 would be our stop. So we're going to put our stop at 61.66. And we are going to make this a market order. Now, there's a couple of ways that we could do this. We could do it as a buy stop, but this is what makes the most sense to my brain. So we only want to buy this if it goes at or above 64.60. So this is a conditional entry. And you might say, well, I'm about to go on a vacation. And so I don't want to just put it on a watch list and keep looking at this every day. I'm not planning on looking at the markets a lot for the next week. And this is a way you can set yourself up that if it goes up, you're in. And if it goes down, you can cancel this order when you come back. And either way, it's a win. And what do I mean by that? Well, what I mean is if the stock keeps coming down, then you may want to, and let's say it comes down to here and bounces at about 62.50, then you may want to change your entry. I got to 64.60 as our entry because I looked at today's high, which is 64.40, and added 20 cents to it. Now you may want to add 50 cents. Some will say if it's under $100, I make it 20 cents. If it's over $100, I make it 50 cents. If it's over 200, I make it $1. Or you might say if it's under 50, I make it 20 cents. 50 to 100 is 50 cents. But, have a set of guidelines that you follow on that. And just because this is a less expensive stock, that's how we came to that. Somebody asked how I came to our entry price, and that's how we came to that. Okay, so that's our first example trade. And you're not going to hear a ping of a fill unless it goes above that price. Now, if we look at Target. Now, Target is one where we're having an up day in an uptrending stock in an uptrending market, right? Like it's up 71% over the last year, up 55% year to date. It's been kind of moving up the hill, but we've got earnings coming up tomorrow. And I remember the very first time I did an analysis on a stock and then I ran it by the coach. They said, but did you notice that earnings is the day after tomorrow? And it's like, no, because I had this whole trading plan and looking out for earnings wasn't part of my trading plan. Now, does this mean that you can't, buy the stock because earnings is tomorrow? Not at all. But James talks a lot about this in his class on Tuesdays. Were he to decide, and I'm just speculating, maybe he wouldn't be interested in Target at all. But, were he to decide to add a stock to his portfolio, he often will walk through the example of buying the stock and then buying a protective put, which gives, so if you buy a protective put, it gives you the right to sell the stock at that price. And so, and we don't need coverage for a long period of time. And let me just change this back. We might just say, hey, if it goes back below, this price, we want the ability to sell it. And then you've got to pay for that privilege, right? To have that right. So if you came to your trade tab and you said, okay, earnings is tomorrow, I only need coverage until Friday. And so you might say, hey, I'm willing to pay $3 to have the right to sell the stock at 147. So then I'd be down about $5 on the price of the stock, plus I paid $3 for the put. But then if the stock gapped down, we'd have a way out. Sorry, I didn't put this one in. Let me just do that. Okay. So, we'd have a way to do that. Now, the other thing that some will do is they'll say, well, if I'm paying $3 for that, what I'm going to do is come up here and I'm going to sell a covered call. And so I'm using the money that I got from selling the covered call to pay for the protective put. And that's called a collar. And both of these expire Friday. And if both of them expire worthless, then you still own the stock and you have had that protection for 3 days. and, one has kind of funded the other. All right. So that's an approach we can take, but we have to be aware of all the things going on, not just the trend, not just the candlestick patterns and the story they're telling us, but we want to look at it also in the context of what's the market doing, what's the sector doing. And some might come and say, well, I look at Target as consumer discretionary. Others might buy groceries and other, household items that they consider staples. So this is considered a staple. And if we look at the staple sector, it's been kind of going sideways. So Target has been kind of outperforming its sector, hasn't it? But that's another thing that we can take into account and that we can plan for, and we can manage the way we invest accordingly. Okay. And so with Target, that's an up, we have an up day, in an uptrend. And if you're saying, well, why is that candle dark green when all these candles, are clear? And, it's because this opened higher and is currently trading lower, but it's still up over $1 from the close of yesterday. So I use candle trend, which takes that into account. Okay. Yeah. Okay, so that's that one. Let's look at CSX. So, and CSX, here's another uptrending stock. It's up dramatically in the last year. So from 33 to 53, up 38% year to date. If you're not familiar with this company, it's in the industrial space. So it's transportation services in the US and Canada. And it's kind of come back to this 30-day moving average, which has recently been acting as a support level. And we have a down day today. But if it goes back up, you might not want to miss it. And so again, like I just thought we'd practice this idea of the conditional entry. If we said, okay, the high today was 51. So if we made our entry 51.20, if our recent low was down here at 49.71, if we put a stop, 3% below that, that would be at 48.21. We're attempting to define our risk. Now, with a stop loss order, there's never a guarantee that we're going to get out at the price we requested. If it gaps down, we could be out much lower. And that's why over earnings, when things can gap, we might decide to use a protective put instead of a traditional stop. Oh, sorry, I didn't mean to do OCO. I'm just going to do with a stop. So we're going to make our stop 48.21. And we're going to make our entry 51.20. We're going to make both of these good till canceled. Well, all of a sudden it doesn't want to let me do that. My system has frozen. I wonder if it'll let me. Okay, I'm going to bring up another. I don't know why that happened. Just give me a sec. Yeah, it's but it won't let me change it. It's all of a sudden it's frozen. So I'm trying to sign in again and see if we can just finish this. because I don't think it's even going to let me, it's not going to let me log out. Okay, so we were on CSX. And let's just make this. Now I can put it in. So you have to leave that as a day order until you get your condition in. So 5021 is our entry. And this may not fill today, and we're okay with that. Like, it may not fill till tomorrow. And then we're going to make our stop 4821. Until canceled. And we're going to do a $25,000 position. Oops. We better put that in our larger account, confirm and send. And so again, we only want to enter if this goes above $50 and, oh, now it's at 50.35. Sorry, this is 50. This is one of the things I tend to do is I'll look at this and then I'll go and say, does this make sense? Well, this would fill immediately because this number is supposed to be 51.20. Okay, so if this goes above 51.20, does that make sense? That makes sense. At stop is at 48.21. Does that make sense? Yep. And then we put that in our trend trading growth stocks. Actually, this one, the last one also paid a dividend. So you may want to put it in your dividend stocks also. So we could move that once it fills. Okay. Yes, it needs to be a day on the market order. And I changed them to good till cancel, and that's why that caused that to freeze. So I didn't realize that would do that. So, we learn as we go, right? So we've got our conditional order in here. Yep. Yep. So we've teed up this order, but it in all likelihood may not fill today. Okay, so let's look at some other stocks. So we talked about Target. Let's look at Crocs. So with Crocs, we have, this kind of wildly swinging uptrend, and this is the kind of trend. Now some people may not want to trade a trend like this because, you can have a fairly big pullback before it comes up and hits the next high. And if we look at the length of this pullback, that was 15%. This one was 22%. This one was 12%. This one, 8%. But it has been, until we got to this one, it has been hitting new highs. So here was a, high, higher high, higher high. This is not a higher high. It's probably a similar high. Like it actually is a higher high in that, it wouldn't say that this was the 1-year high on this, if in fact it wasn't. But the way I've drawn the lines, it actually doesn't look higher, does it? But, is there an opportunity here if you're okay with, these pullbacks and looking at the trend to say, could I do a conditional order and just trade it up to the previous high? We could do that. And you may want to then come and look at, well, what was the response on the last earnings? What are the analysts saying? If I come and look at the Analyze tab, and somehow my system doesn't want to bring this up, but how are we doing compared to last year? Well, sales are up, but profits were down dramatically. And so you may say, yeah, maybe I want to look at something that has more consistent results. So, looking at the technical analysis may pique your interest, but then when you look under the hood, you may say, yeah, you know what? I think I want to look for something that looks a little better under the hood as well. Okay. Yeah, like right now, it's below the 30-day moving average. Somebody said, if you have a 50-day moving average on your chart, it's hugging the 50-day. But what I'm seeing in this is that it's been weaving back and forth through a lot of these moving averages. Yeah. And then if we look at something like APO, and this is where I think patience is required, because, when we look at a stock like this one, and, if we're playing I Spy with my little eye, I see this cup and handle setting up. But it looks like it might be kind of like part of one of those Russian stacking doll series, because it's coming down again. And is it going to go back up? And then is it going to break out and come back and retest and then take off? We don't have any sign yet that that's happening. And so, while this may look, like it could be interesting, the jury is still out. Like, we don't know if this is going to break out yet. And we don't trade what we think. We're trying to make investment decisions based on what we see, not on what we, think may happen. We want to see that confirmation on the chart. Let's look at Allstate. So, this isn't a similar pattern, but what we're seeing here, some might call it a diagonal resistance breakout today. And if you wanted to place a trade, and you wanted to do something as an income generating strategy, one type of target might be, a swing target. So the previous high back up around 275 to 277. We could also say, well, one day above a diagonal breakout does not a, change in trend make. Like, maybe I want to wait for confirmation. And so wait for another day to see it occur again. And if we come and we look at, say, Lamb, this is a stock that's up 88% year to date. So it's hard to argue that it's not been uptrending, but it's had periods that weren't exactly bullish, right? So, here we had high, lower high, lower high. And then it broke out. And so if we come in here and we look at this and say, well, it as it turned out, it would have worked out had we bought on the day we saw this diagonal resistance breakout. So this might have been an entry. But if we missed that and then it came up and we saw this pullback, like, could this have been an entry? This close above the high of the low day after coming back to the 30-day moving average. This could have been an entry. Could this have been an entry? And some would argue that this is this whole pattern here is called a morning star pattern, where you have a big down day and then it gaps to the downside, and then the next day is robustly bullish and at least goes halfway through this candle. So this day would have been considered an entry. And you may say, but I should have gotten in back here, and now the stock is dead to me because I missed the entry. Well, not necessarily. Like, and then when it came back and pulled back here, might this have been considered an entry, or here? And now we're here and we've had this pullback, and then we've had this diagonal resistance breakout. And if we're looking at this, so it broke out, retest. Could this day have been an entry? Oops, I didn't draw that very well. Could have. Could have. And now we've got this 1 day pullback, and we're down almost 6%, 5.6%. But if tomorrow we have an update, could that be considered an entry? It could. It may not bounce. It may not bounce, but we're waiting to see. Could we put an alert in and say, well, the high of this day is 329. So could we put an alert in and come down? Sorry. And say, we'd like to create an alert. That's another way, that we can look at this and say, hey, if this goes above 3, where was our high today? Just 329. So if this goes above 330, let us know. So we're going to create an alert, and it will come like however you have this set up. May shoot you a text, it may be an email. Bullish opportunity. Yeah, and you may want to like look under the hood before you place that alert, or you may say, this is a tech stock. If we look at how it did, and just because, this year, 2025 was much better than 2024, up 43% their earnings per share, doesn't mean that they're going to repeat that. And sales were up 26% year over year. But you may want to go back and look at the last earnings announcement. It beat on earnings, but you know what? Cisco beat on their last earnings, and look at what happened to that stock. It tanked. So just because a stock outperforms on earnings and comes out with a good earnings report doesn't mean the market is always going to react favorably. Like, it kills me often on Apple earnings when you see this kind of thing happen. They'll come out with a great report, but it wasn't as great as the market was expecting. And even though all the numbers are kind of mind-blowingly good, we don't know what's going to happen. And this is why some people take protective measures if they're trading over earnings. They'll handle earnings season differently, and so that's something to keep in mind, and just because Lamb is down today, we don't want to overreact. If we got in, let's say we got in here, we're still up. If we had entered on this day, we would still be in a profitable position. So just because it's down 5%, there's an expression, you don't want to throw the baby out with the bathwater. And if you don't know where the history of that expression, back in the day, pioneer days, when people would have their annual bath, the men bathed first, then the women in the same water, then the children, and last were the babies. By which point the water was often so dirty you could hardly see the kid in the bath water. So that's why that's where that expression came from. Like something you didn't know you didn't need to know. But yeah, so don't throw the baby out with the bathwater. Adobe, here's another one. And this is another kind of like APO. Now you may look at this differently and when you have this period of consolidation like this, we are always going to have an uptrend before the breakout. But we've seen resistance here around this 274, 275-ish level a few times. And some may say, well, I see a bullish entry today, and others may say, I'm going to be patient because it's bonked its head up here around this 275. You know, it's for $6 a share. I'm going to wait and see if it makes it through here before I get in. Yeah. Yeah, so the next day somebody asked somebody asked you to have a quick shower. You can think about, back in the day when you had to heat the water and multiple people use the same bath water. Yeah, because somebody just typed into the chat like gross, like that's pretty, that's kind of yucky. And yeah, I guess it was, but I bet you still felt a lot better than before you got in the tub. In any event, that's a wrap for us today. But the point that I was trying to make today is don't look at one day and think that your skills have gone bad. Don't think that this is a change in trend because we have one bad day. We can have a good day in a downtrend, we can have a bad day in an uptrend, and we can have, everything in between. And there are still opportunities for us as investors, in all market conditions. So I want to thank Mr. James Boyd for joining us in the chat and for being such a good sport. I want to thank the people behind the scenes, and I want to thank all of you who continue to show up week after week, and we're linking arms and we're learning about this stuff together. I also encourage you to hit the like button. It helps move things up in the trading algorithm so that more people can find this content. There is no survey today, so you're off the hook on that. But if you could hit subscribe and subscribe to the channel, it's where you can find example trading plans and all of that good stuff. I want to show you one for today. I know many of you are already aware of it, but Trader Talks from Schwab Coaching, if you come to the playlist and then come down to trade management mini sessions. One, if you're new to candlestick patterns, there's a whole series, there's 15 so far, of short videos on different candlestick patterns like inverted hammers and that morning star pattern. There's one on that. There's the morning star. There's a bunch there. But there's also, and we did it in this class, a simple stock investing trading plan. So you may want to check that out also. So guys, that's a wrap for today. Thanks for joining us. Have a really awesome rest of your day. Up next is Swing Trading with Mr. Mike Fairborn. You'll want to stay tuned for that. Take care, everyone. Bye for now.